I'm Spencer Cole, the Chief Investment Officer of VOX Royalty Corp. VOX is an extremely unique mining royalty investment company targeting the highest return on invested capital in our entire $70 billion industry. We've been around for 10 years, but we've only been listed for 2 years. So still very much a ground floor opportunity for investors.
Spencer, good to see you. Been a while, but you got a bit of good news out recently. A few acquisitions, and also, but more importantly, do you mind, let's kick off with the 2022 revenue outlook. Those numbers look a bit higher than I remember.
You're absolutely right, Matt. So we just published on the 26th of May our maiden revenue guidance for this year of $10 to $12 million top line revenue, which, as you pointed out, is more than double last year's revenues of $4.6 million. So, I think this is really just delivering on what we've committed to investors. Of a lot of our key royalty assets are starting to come online, and organically the portfolio has been really coming into its own over the last couple of quarters.
Are you frustrated then that the market reaction was kind of muted on that front? What should we interpret 10 to 12 million bucks Canadian to mean? Because I'm not sure the market feels the same way that you do.
No, you're absolutely right, Matt. I mean, we are deeply frustrated by the share price response or lack thereof. Doubling revenue guidance in such challenging market conditions, you'd expect some sort of share price pat on the back, so to speak. But understandably, equity market conditions are fairly bleak at the moment. So, and we're not immune to that. So we understand some of the reasons why, but it doesn't mean we're not getting out on the road and trying to communicate the story to investors, because we think there is so much fundamental positive news going on for the company. All we can do is continue to communicate it with investors.
Okay. Now, you've long extolled the virtues of investing in royalty companies. They tend to outperform in the long run. You're not doing that at the moment. Royalty companies broadly, and then you specifically, you've come off just like every other equity out there. So you're not immune. What have we got forward to look to?
Yeah, so I think you're absolutely right. We're in the same basket as a lot of other royalty companies. In terms of what we've got to look forward to, I think as we continue to deliver quarter on quarter sort of record revenue growth, the market has to take notice. Likewise, we've been working in the background on a secondary listing on the Nasdaq, which we think should be hugely impactful from a liquidity perspective. We've had some really promising meetings with some of the who's who of large institutional investment funds, but their consistent feedback is, come back to me when you've got more trading volume so I can actually take on a larger position on market. So we think enhancing trading liquidity will be a key step towards I guess the share price responding.
Right, and well, that's a brave move considering recent announcement you made with regards to the OTC markets, where you've had to kind of explain yourself and the relationship with a company called GRA, doing some work with your newsletter organization function. You're going to be under a little bit more scrutiny on the Nasdaq. So maybe, if you don't mind, can you explain the OTC situation, why you felt the need to put that out, and why you were asked, why you should have put that out, and why you think Nasdaq is the right move for you in this kind of environment? Yeah,
absolutely, Matt. So on the 8th of June, as you mentioned, we put out some disclosure to the market, just commenting on or responding to a query from the OTC markets. So to be clear, we weren't sort of compelled to put that release out. We put that release out at our own initiative. I guess the crux of that announcement was just talking about a recent engagement that we made with a third-party marketing firm called GRA. Other royalty companies have used them in the past, so we're certainly not the first royalty company to use them. They write newsletter, email type blasts and send it out to their network of investors. The OTC had some concerns with, I guess, how some of those emails were worded. They were entirely based on publicly available information. Was factual in nature, so we don't believe it was promotional. But the OTC just asked us some questions, and so as a result of that, I guess we've revisited our engagement with that group. I think going back to your earlier question, what can we as VOX management control as it relates to the share price? We obviously can control the fundamental value in our royalty portfolio. So we continue to acquire great royalty assets at great value. And then the second part of that equation is we're constantly obsessively focused on finding new pools of investors that we can communicate the VOX story to. And so this engagement was just another example of us, trying to access a new pool of investors that we thought the VOX story would resonate with, particularly during these periods of high inflation.
Okay. So, and when you say you revisited, have you terminated that, or have you made yourself clear to them about how you want to be talked about in the marketplace? And because the feedback was kind of mixed, right? Some people slamming GRA for being a pump and dump type organization and pointing to their track record and other instances. So, what does revisit mean for you?
Yeah, so I think anytime we engage with a third-party marketing firm, we have fairly strict engagement terms, and our standard engagement terms include editorial control. So I think in this case, we've communicated with the marketing firm, and I think we've stopped all marketing activities with that group. Look, as with a lot of things we do, as an organisation, we're fixated on running experiments. Some of the experiments pay off very well. Some experiments, won't be revisited. Whether it's acquiring royalties, doing due diligence, or even investor relations related experiments. For us as a management team, we're not going to sit on our hands. We're constantly trying to find new investors to communicate with. So while we don't like putting out announcements like this necessarily, we thought this was best practice to respond to the OTC, and we'll move on from here and continue to work with other marketing firms to try and access new pools of investor capital.
So would you say to the OTC, congratulations, you're right to pick us up, and in fact, you're right to pick anyone up on over promotional material? It's better for the industry? Or do you say, well, actually, we got caught out there, put our hand up and say, we got it wrong, we're going to, move on? How do you view it?
I think we certainly don't believe that what was sent out by that marketing firm was promotional. The OTC took a different perspective. So it's not about necessarily congratulating the OTC. I think, different people are going to have different views on I guess, how factual information is presented. I think we are comfortable with what we've disclosed in that press release, and we'll move on from here, and continue to look for new groups to work with to access new pools of investors.
Okay, sorry, really, go on about it, but I think it's important that people understand the type of company that you guys run, and how you view this. For some people, it would be like, normal course of business, we're going to carry on doing what we're doing. We answered the questions, but we'll carry on doing it the same way. You're saying it's an experiment which, didn't work out. We're going to move on to other things. Okay, let's get back to royalty revenue. So 10 to 12 million is brilliant. You've announced a couple of deals recently, obviously with the Treasury guys, and also one Muna royalty in Western Australia. Tell us a bit about that and what that's going to add to the story.
Absolutely, Matt. So on the 26th of May, we announced quite a major acquisition in the company's history. It's a producing iron ore royalty called One Muna. It's located in Western Australia. And it's operated by an $11 billion Australian iron ore producer called Mineral Resources. That operator was one of the key aspects of the deal that we really liked, Matt. Mineral Resources is a group that we have a really good relationship with. They operate one of our other producing royalty properties. So, we know the operator well. We've got a really constructive dialogue with them. And the asset itself is it's located in the Pilbara region, so it's within 30 kilometres of some of the world's largest iron ore mines, and it's been producing for about 12 to 18 months, and the mine life is anywhere between sort of 10 to 18 years based on current production, and they're doing extensive drilling work there, And the other aspect that I should also mention is the mine is currently producing 5 million tonnes per annum, but it's fully installed and fully permitted to double in capacity up to 10 million tonnes. So we love the fact that there's expansion potential there that could have quite meaningful revenue consequences.
Why don't these companies, you've done a deal with an arm's length private company and pick this up. Why don't these $11 billion companies know that these royalties are there and go and buy them themselves? Why do you sneak in around the back door and get them when they can't?
Look, sadly, Matt, often they do. So I think we've lost about 15 royalties to mining operators in the last 2 years, which is immensely frustrating when you do all the legwork to try and, essentially serve up a deal on a silver platter to a large mining company. Now, in cases such as this, not sometimes the operators have just got other priorities. Sometimes it is focused on operating the actual mine itself. Or sometimes, they don't even get wind of the deal until we actually, approach them to sign off on the final paperwork. So there's a whole spectrum of reasons why different mining companies won't acquire royalties. Some companies are just, squarely operationally focused, and they won't necessarily seek out third-party royalties as intensely as we do.
Right. Okay. If that's the ratio, then I guess the occasional win is quite good. The other project you picked up is the other NSR over the Golden project was run by Treasury Metals, a group I met last week in Canada. Real mine builders. So talk me through the kind of due diligence process that you went through, because you don't want to pick up stuff which is not going to go into production. You want to pick up stuff which you feel has got a chance of paying out. So what did you make of their project?
Yeah, no, you're absolutely right, Matt. We really like the Treasury Metals management team. We think they are credible mine builders. So exactly the type of management team we want to be operating our royalty properties. That was an interesting royalty deal where we acquired these 3 gold royalties in Canada from a Canadian prospector. Treasury wasn't directly involved per se in that royalty transaction. As you mentioned in your interview with Treasury, Sprott put about $20 million to work buying a new 2% royalty. I guess pound for pound, we paid a much lower price than Sprott paid, largely because I guess we bought a secondary or existing royalty that covers part of the Golden deposit. So, I think we think that deposit's likely to grow in size based on the ongoing drilling work they're doing there. I think the fact that they're expected to put out the pre-feasibility study on Golden later this year, fast tracking into feasibility next year, and to have a construction decision, within 18 months, that's about as fast as you can possibly go. But they're doing it the right way. So, and to have the project fully financed into a construction decision, those are all the milestones and de-risking events that we look for in a royalty, where we're acquiring the royalty at great value today, but then we expect that value to re-rate in coming quarters as management continues to de-risk the project. So, we're really excited to be able to get a royalty that's exposed to such an exciting project.
Right, and then there was also a bunch of others rolled up in there, Woolbridge and Toro Gold and Pan American, etc. So you kind of picked up a little package there again. I mean, how long does something like that take to get over the line?
Look, it certainly takes months. Anytime you're acquiring existing or secondary royalties, generally speaking, you've got to sort of dig through what the history of the royalty is, and some royalty holders keep royalties in pretty decent shape. Others, the agreements you pick up are a little bit dusty per se, and you need to sort of do a bit more due diligence. So, and anytime you're dealing with an individual that's close to retirement age, it's a very personal choice to sell their existing royalties. So often when we deal with prospectors and prospectors' families, it takes a bit longer because they need to be fully comfortable with us as a group and the transaction and how it's structured. So, I think it probably takes a bit longer, but, the value outcomes are quite attractive from our perspective.
Okay, so let's look at the market. Let's look at share price. Let's look at the things that investors care about, which is you've had a sort of nice growth period since August last year, then kind of leveled off a bit, and more recently, like everyone else, fallen off a bit. How do we read the situation if you guys, royalty companies, and you, VOX Royalty, generally outperform the market over the long run? What are the moments that we look for in terms of that outperformance? Because right now you're kind of matching equities, right? You've dropped off like all equities. So do we look to what's happening with the producers? Do we look at developers? Do we look at, or explorers? I mean, as a kind of reference to what you might do and when you might do it, do you tend to trail producers? I mean, how does it work?
Look, I think I'd probably be lying if I sort of crystal ball this completely, because I think we are in such uncharted waters. But if I look at where we stand today relative to where we were even 2 years ago, Matt, we've gone from 1 producing royalty asset to 6. We expect to finish next year closer to 11 producing assets. And as with any equity, any stock, as revenue continues to grow, free cash flow continues to grow, we can look at dividend policies, and with increased trading liquidity through a secondary listing, we think the combination of increased trading volume, increased free cash flow, exploring a potential dividend policy, and continuing to see this portfolio of 60 royalties mature, we think all those things combined will make it a high probability that the stock price, the share price, has to respond.
You guys can't possibly talk about doing dividends at this stage. You're a 120 million market cap company. You're just starting out. You've got the revenue rolling. Surely that's what you need to be building up.
We'll look at dividends. We're not the type of group to consider sort of a gimmick dividend. We've seen others sort of release a fraction of a cent per share, and we will only implement a dividend policy when we think it makes sense, and when we can't deploy the capital into more accretive uses such as M&A or acquiring new royalties. So you're absolutely right. We need to consider it at the right time, but there's been a number of investors who've actively been asking us when can you consider a dividend. So it's something that we will consider as the year progresses and as free cash flow continues to grow.
Okay, so good. I'm not of that thinking at all, and I think a lot of people wouldn't be. So let's see how your thinking evolves. What I am kind of interested in is what's going on in the marketplace. We saw some big transaction a couple of months ago with Sandstorm, with two big acquisitions there. We've seen a lot of, I think is it Electric Royalties? Is that right one? With Fred's outfit come under a little bit of pressure from Consolidated. Elemental, yes, that's the one. Yes. I mean, come in a little bit of pressure. Unwanted and unrequited pressure. M&A is inevitable. Does the increase in revenue make you more attractive or more defensible?
I think it makes us hugely more attractive. When I look at what potential acquirers of any royalty company look for, it's a base of revenue they can continue to build off, and then it's a huge amount of option value by the size of the portfolio, and having 60 royalties and 10 to 12 mil of revenue this year, and analysts expecting that revenue to grow next year. I think we would tick a lot of boxes for potential acquirers. So, as we've said previously as we've shared previously with you, Matt, we're not kingdom builders. We own 15% of the company. We're shareholders ourselves. So if someone wants to make us an offer that compensates our investors for the option value we've built, absolutely open to that discussion. But by the same token, we've got the luxury of not needing to do any sort of deal. So over the coming quarters, revenue will continue to grow. And so, for us, we're not compelled to do any sort of corporate M&A at this stage, but certainly open to conversations with groups, as it maximizes shareholder value, obviously. Okay.
Well, Spencer, I appreciate your time today, but we will follow your story with great interest. We like it. We're invested. Keep it up and stay in touch.
Thanks a lot, Matt.